Yes. All right, man, let's turn that down. Hope you're doing okay. Had some technical Man, I've been having. Either I'm getting older faster, text moving faster. Gets hard to keep it functioning. You need sound, you need video. You need platforms, you need screencasting. You need it all to connect together. The website to participate, people to show up. It's a lot of shit to put together. So I do these where I come here every Sunday for sure, man, and just try to share a concept that I caught on to in the stock market. I call the money flow. You can call it whatever. Some people call it I know I got some lights bouncing off my camera. I don't know why. Earlier, I had fucking echo that wouldn't stop. Then the computer restarted. So sometimes life and nature pushes back against you. You got all these ideas and plans and start to implement them, and shit just doesn't participate. Doesn't go like you thought. Doesn't go like when you tested it. Doesn't go like in the book or in the course or what the guru said or what they taught you in school. Life pushes on you. You have problems. All we can do in there, man, is get up and keep going, right? That's all we can really do, man. You just play the day that they handed you. And it's like that in the stock market. This is an empty chart, man. It's just a chart. The stock, it don't matter, but just to ease your brain so your brain won't think about it, take a guess. Who could put in the comments first what this stock is? I bet somebody knows. Do you know from just looking at it? Somebody knows. We'll let that sit if you think you know what this is. Yeah, my man just said AT&T. He was fast. There was two of them, one on YouTube, one on Instagram at the same time. All right. $20.69. That's a beautiful thing that they knew that fast. That's when you've been staring at charts, man. And I'm sure there's a lot of you out there just didn't type it fast enough, knew what it was. You get to do that, right? As you stare at these and you look, you're like, shit, that looks just like Home Depot. You notice that, like, as you start doing charts. And I was trying to explain that to a guy today this week, is like, man, I'm not against filters. Sometimes you'll hear me, don't use filters. What I don't want you to miss out on is the ability to do that. See, when you got to run filters for everything, you don't know this is AT&T. You don't look at it enough. Not necessarily. I guess it could depend on how you're running them. But what I don't want to see you do when I say that is, I don't want to see you get away from spending time with charts. Because as you spend time with charts, you notice on this chart, this is just one day, man. And this is a big deal. If you're into the stock market and charts, this is recorded history. You didn't document your day last week, but this did. AT&T will document its day every single day that it's on Earth. You're going to see an open, a close, a low, and a high. And if you look at Friday's price, what do you see? That little tick to the left was the open. That little tick over there to the right is the close. Top at the top is the high, and the bottom at the bottom is the bottom. And as we look at these, we could zoom in. We look at these, and I was saying, if you're on my subscription feed on Instagram, we were talking about on Saturday around 10 o'clock, I've been doing these little talks, little lessons, and we had been talking about the Master Key, the book, and how important. I just kind of set aside that day I need to reflect, man, look at my mind, and look at my life in the sense of I'm putting in bars. Well, this is the price of AT&T. Shit, you wake up, that's your little tick. And then you go to bed. That's your little tick. And it can be from the bottom, and then you had a good day, you were productive, got some shit done. It goes up, ticks over. Or maybe not. Maybe it's fucked off the whole day, and it just comes down and ticks to the left. And you get to decide that, man. And I was saying, life's a lot like these stock charts. So as you begin to think about that, see, that's not a filter. That's looking at your life and looking at the stock chart's life. And I said, as you begin to do things, so come over here. This is stage one. I don't need to put an indicator on there. I don't need to put a moving average on there. I don't need to put anything on there. But if we came over here and we looked, we know each one of these bars is days, right? You see these little boxes? The less you run a filter and the less you look at fucking indicators, the more you'll begin to see this. It's just a naked chart. You'll see these price groupings, these clunches where price puts in these little boxes. The quicker we can identify them, and you're going to have boxes inside of movements. So if you understand the money flow, you know what I believe is that price moves in 4 stages. Not perfect all the time, but sometimes it does it perfect. But in general, it tends to do this. And there's fancy names for the stage. You can call it accumulation, you can call it markup, uptrend, whatever you want to call it. And then you have periods where price just stops going up, and you can see this in everything. Eventually, gas will top out due to, it's a commodity, supply and demand. If less people start using it, or if they have more supply, right? So there's dynamics that affect this movement. Now, we don't know all that, man. I'm not an economist. I'm not I know a lot of people play economists. A lot of people think they understand all that stuff. Like they understand politics. Think that, if I was a fucking I would do it. Man, you don't even have your own checkbook balanced. What are you going to do when you get to Washington? So everyone thinks they're an expert at a lot of things, but most people are not. Just matching their socks, getting to work on time, having a good attitude, that would be a lot to ask. Okay? You don't want to be that person. You don't want to be that person. You want to be a valuable person. Valuable people make people feel better. You know that, right? I mean, if you're an asshole, you're not a valuable person. Right? Because there's more to life than what, right? It's how we relate. So everything we want, other people have, man. You know that, right? Everything you want, other people have. So we can't go through life being an asshole, man. Or spending a lot of time trying to match our socks, right? Or feeling like we know everything. We don't. We don't know price direction. I don't know where price is going. I'm not so arrogant as to know that. I don't know what's going to happen on Monday. I have no idea. I do know this, though. As price moves, and this chart has been our teaching chart because AT&T's been doing a beautiful pattern. As this price moves, you're going to see what we call boxes, right? You're going to see a lot of them. They're going to appear. They come in groups of 4 and 5 days. That's where you get these boxes. What these indicators are allowing us to do, and I use a few, and if you're new to trading, you may not know about them. If you're a long-time trading, you probably think you know more than you know. Sometimes people are just too fucking smart to use them. That's the problem. So that's over extreme to the high, and this is over extreme to the low. And then you could go get 30 other indicators that'll tell you this exact thing. And you could put all 30 on your screen to confirm and agree with what this is already telling you. Right? So I had a guy say to me, well, that's a bearish triangle. Okay, or a stage 4 decline, whatever, man. Like, it's all the same shit inside of the thing, man. I mean, there's a lot of ways. You could wait for a crossover with moving averages. I'm sure you've heard about that if you've been involved in trading long, looked at many trading books, right? Or you could just have the price goes under the line. They both happen at basically the same time within 1 or 2 days apart, okay? And then the shit keeps doing something for a minute. And then what? And then it changes. And you'll have these zones, and you see it right there, right? Went below the green line, went above it. And you could come over here, and you could just take a tool or get a crayon. You could print it off, get your kids to do it, right? And everywhere it crossed that line, you just kind of throw a little chunk, right? Now we're crossing it to the downside. Now, one thing you'll learn as you study moving averages, and they're not infallible, meaning price can break above it, start to go, and then come back down below it. And that's a term they call whipsawing. Price rises up, price rises down. So we can't, if you lock in too tight on this, or you have the wrong, you're too tight compared to this, the price, the price point you're trading. This is a daily chart, the time frame, right? If you're too tight on that, if you ran a 12-cent stop on here, you're going to get stopped out every day, all the time. Why? The stop's not appropriate to the time frame you're in. So if you're getting whipsawed a lot, maybe that's the problem, right? And that's one of the things that make trading hard is that price changes its mind. It's chaotic. It starts to go up, starts to come down. It doesn't follow any perfect patterns. And what human beings is, we've come through here and we've tried to find patterns. People call them different things. You know, all of these things you see on these charts, let's take this off for a second. This right here is slow stochastics. I don't talk about this in the book, The Money Flow. And the way I use this may be a little different than the way you use this. But what I'm trying to do is use it inside of a recipe of these other things to kind of give me an idea. So if we look on this chart, we notice, just notice, without, getting down in the weeds, if you were to take a crayon and just kind of draw on it, what do you see? It's coming down, right? It's coming down. What do we see? Where's it at below the 20? It's starting to come down. It's broke the 20, right? So if you look at AT&T, here it was breaking out. Now it's what? Breaking down. So as I'm looking at this is what I'm looking for, this right here. And I'm like, okay, I don't know if it's going up or down. Where does it look like it's at? That's what I'm looking for. And as I look at this, when it says in the book, best time for selling, that's what it's referring to there is price has dropped below the 20-day moving average, right? But we're also looking at the 5-day exponential, the 10-day, and these are just moving averages, not that complicated. You learned about them in 4th grade, even if you didn't use them much. You use them in your own mind as you go down the road. If you drove down the road and you saw the gas prices were, 50, like say you're watching, it's like $4. You're like, fuck. Then it's like $4.10. And then you're like, what? It's $4.20. Like same with housing prices. If you watch them, it'll tick. And as it tick, it records a day. And as it records a day, there's 4 or 5 days. Now what? We can make boxes, right? The price begins to move and it moves higher and higher and higher and higher. And all we're trying to do with Inside the Money Flow is give that shit a name. And, it's a stage 2 breakout or a markup. Price is moving higher. But we need a way of defining that. What does it mean that price is moving higher? We need someday some indication that tells us that's what it is. And so for me, I'm looking for price to break out or move. When you say, what does a breakout mean? It moves in that direction, not half-assed, not sort of up and then down. It moves in a fashion. And that right there, this is a classic, this is a breakout move. Price opened here, means you got out of bed here, and you finished your day up here. Killed it, got 2 sales, did 10 follow-ups, went to the gym, did all shit you said you were going to do, right? That's that. Update, man. Everything went right. Breakout. What is this? Everything went wrong. What is that? That's a breakdown in the opposite direction. What is that telling you? Everything's fucked this day, man. Look where it opened. Way up here. Where did it close? Way the fuck down here. Look. That's a breakdown, right? And then even once it breaks down, look, price comes back up, starts to drift, comes back up, starts to drift, comes back up, starts to drift, and then what? Everything starts coming together. What we're looking for, not anticipatory, I don't know when it's going to happen, man. But what I'm looking for, if I'm looking for a breakout, that's a breakout. Price drifted. Notice when it's over here, see that little dotted line? Inside the book, The Money Flow Trading System, I call this the trigger, 5-day exponential average. It's 5 fucking days. System is fractal, man. Everything about life is fractal. Everything about, I was interviewing a guy, this guy Oben, we're talking about real estate. He's buying 30, 40, 50, 100, 250 unit apartments. And I'm like, how you do it, man? He says, same as a house, you just add zeros. He goes, it's the same shit I was doing with houses, it's just zeros. And it's like, okay, you could buy 1 share, 10 shares, 10,000 shares, fucking million. It's up to you, man. How big you want to play, how much money you got, man. Right? And so as we look at that, if we understand the time component, time times amount times yield, it changes how you might play this. Are you trading it? Right? I mean, are you taking an in-out risk? So if you're saying, listen, I'm trading, I want to get in, and I don't want to, if it's going to move against you, then you're getting out, then you got to set a stop. When it hits it, you take it, you close it out, you take the loss, man. Right? But if I'm owning shares of AT&T, I'm not going to do that. I'm not selling AT&T. They pay me money, man. What do I want to do? On this, you could trade it, but I would hope you would just own some too. So as you own some, and if you're watching price and through its daily movement, through cycles, it's moving. Sideways up, sideways down, sideways up, sideways down, right? Having good days, bad days. So in something like this, what I'm looking for is try to accumulate down here. Assuming, I skipped a whole step about value there, so you just have to go with it, but there's also the perception of value. If someone perceives, let's say you think stock market's coming way, way, way down, then you may not value owning these shares. You may say, well, I don't want to own them if price is coming down. I don't want to own these shares. Okay? So then you got a decision to make, right? So if you're a trader, most traders, they're not trying to compound. That's not what they're doing. They're trying to get in, capture a move, and get out, and that's and that's fine. So when you do that, now you got to add parameters to what you're doing. I need to set a target. One thing I noticed about the money flow is that wherever it had been before, price tended to go again, right? And you'll see it bang these areas and stop. And so as a trader, I began to use these areas. Now, easiest way, if you get the concept of pivot points are points, turning points on a chart where, now again, depends on your time frame. This is a daily chart. When I'm talking about a pivot point or anchor point, is the highest high and the lowest low of a move, or what I would call a stage. Like, what do you mean a stage? Meaning, if we think price moves in 4 stages, meaning it's going to be in a 1 for a minute, and then it's going to be in a 2 for a minute, and then it's going to be in a 3 for a minute, and then it may just stay in a 3 and then break out, and now it's back in a 2 again, and then it stays in a 2 again, and it does it, and then it goes back into a 3 again, and then it comes back down into a 4, and it's just moving through the waves of all the fuckery that goes on every day in the world, man. And there can be, let's say, Russia does something. AT&T's price will come down. What is that? Are you not paying your phone bill because of that? No. So the intrinsic income, the money the company makes didn't change. The perception of the value of the stock changed. And inside that world is complete fucking chaos. Oh, I think this, I think that. Nobody knows. If they knew, they'd be the richest people in the world. You only got to get it right 3 fucking times, man. Put 100,000 in, put it in options, bam. Do it again and again. And you got millions. It's not that complicated. 3 executions and make anybody on here a millionaire. If you go big enough and execute, leverage yourself. So if you know where the fuck it's going, you can have unlimited money. Truth is, nobody knows. That's why they don't have unlimited money. They're guessing. When we trade, we guess. And what we're using, a strategy or an indicator, is to help us guess. That's all that is. Here's how I guess. How do you guess? He guesses like that. She guesses like this, right? And they may say, well, I'm trying to find an edge. Okay, so you have some mathematical edge. Okay, you think computers around the world haven't figured that out? You think you're a fucking math wizard? You come up with something nobody else has? No. So all we have is just what happened yesterday could happen again. That's it, man. Time's being recorded. And we can watch and we can look. We can look for levels. All I hope to do is to add structure, to take the chaos of up and down and uncertainty and just try to begin to put it into a pattern that I can make sense of it. And I may not be wrong or right. And if I'm wrong, okay, we just need to set a couple rules to protect us from ourselves, man. Had a guy tell me, send me a text. I won't give your name up, bro. Don't worry about that. Or could have been a lady. I just assumed it was a man. And lost 100K trading options, you know. And I think and shares. Lost 100, man. Closed it out. It's done. Gone. And, you know, it was a highly speculative leveraged bet. And it's like, what do you do? I don't know. I wouldn't have done that. I mean, I had done that in the past. When you lose money, it goes. They don't give it back to you because they feel sorry. It's just, it's gone, you know? So keep that in mind when you come to this. The beautiful thing about this is you don't have to play that big, man. Meaning you could have done a $500, and if options are your thing, you $500 options trade. Like if that blows you out, then you go lower, man. Like you don't have, these markets never go away, I guess is what I was trying to say. There was no need to risk $100,000 in it. There's no need for that. You could have done 5, turn 5 into 10, maybe add a little bit more. Now you got 20, turn 20. Like there's no need to go so like, because it's never going away. Because if what you figure out works and you can repeat it, you have time on your side, man. Right? So we don't have to be in an urgency where we put ourselves so at risk, man, when you can learn and practice. That's one of the things about the markets that I probably don't talk enough about. Maybe other people don't. I don't know what other, like, is that you have time to create something, an art, a craft. Like you have time to define what a breakout is. For you have time to define. See, for me, it's super clear. Previous highs become targets for me, right? This becomes super clear. And so, and while this part is not that complicated, technical analysis, we all can set our own little rules and what we see, triangles or whatever. Like we you know, are we looking at whatever we're looking at, you know? If you were, I don't think anybody even does Elliott wave anymore, but if people did, like whatever you're doing, as you hone in and master that, you know, it may be a little different than other people. You have time. Like every day you get to do it again, man. So don't put yourself in a situation where like you go to zero when it comes to trading, you know. Investing, your money's in there. And if you're quote investing, it should be in things that theoretically zero's not on the table. Like none of us expect Google to go to zero, okay? Right? So that's off the table. But look what's happened. We had this huge down move, right? And what is that in the money flow? This is a down move, right? This is and it's not so much that it's even a crossover. It's just the numerical alignment. That's one of the things about moving averages is it's more than just where the crossover and all that happens. It's like, look at the alignment of it. The 5-day is pointing straight fucking down, and it's below the 10, which is pointing down, which is below the 20, which is now pointing down. What that is telling you is all of the momentum is to the downside. So you would have to ask yourself, what makes me stand in front of that momentum and be like, would I buy there? No, I wouldn't. Not if you know the money flow. But now maybe you're like, no, but I would short there. Okay. And you can do that. And then we can set up rules for that, right? So within this movement of price, it's fractal. And there's different time analysis, and there's different lengths of time, and there's different, like, how, you know, what are our expected returns over what time, and we can take this down lower and lower, right? We could drop to a 1 hour, or we could go to a 1 week. And how we reflect on that time is going to decide what it is you're doing while it's doing it. So if it's me, I'm not looking at a lot of economic reports. I'm not looking at I'll do it just from mental. What's up, man? I'll do it just for Taylor says, GP, what are your settings? Taylor, man, if you had bought my course, Getting Started with Stock Charts, the Money Flow Way, I walk you right through that, man. Like you're my little brother or my best friend. I sit you down and we go from a blank chart like this because you actually don't deserve indicators. You've done nothing really on earth to deserve them. You didn't help create them. Like you don't even know who made the MACD. All these things are given to you. It's the privilege, man. You have a fucking privilege right now. Back in the day, this is how blessed and privileged you guys are. Me too, man. When I would get my charts, this is how they would look. And you could get them in the mail, right? And just as I was coming into stocks, they were really just getting online. But Taylor doesn't have my course, man. I know you're busy, bro. It's $49. It's a lot of money. Why would you want to spend all that money? And this is how you'd get your charts, and you would get a pencil. You would get a pencil. You would get a pencil. And you would take the fucking pencil, and you would get a calculator, and you would add these together, and then you would start penciling in the 20-day moving average. And that's what these grid boxes were about, to give you the location of how to do it. But now, you get to come over here, right? You just come over here and click a button, right? And you go to simple moving average, right? You click it, you type 20, you go to green, you hit the button. And there you go. It's calculated for you. 20-day simple moving average. You don't even need to know math. So in that course, man, this is what I do, bro. Before we got a video to get through before we even have the right to even have this on our chart, man. Because we got to see some things in here, man. This is how tight you need to get this down. So just looking at this 20, man, how do you not have my course, bro? You like upset me there, man. You upset me, bro. I thought we were friends, man. What kind of friend doesn't buy your course? I thought you guys were my friends. Some of you guys claim to be my friends don't even have my $49 course that I guarantee you teaches you more in there than you know. And the fact that we would be friends and that I would have a course so cheap and that you don't own it is fucking ridiculous. And you were like, oh, I want to be getting good at stock market. Do you? Do you really? Do you? Because you're going to go to lunch, you're going to spend more in that, and then you're like, but Gerald, I'm your friend. Are you? Are you? You buy plastic shit at Target and then throw it away. Don't own my course. So as we start learning about anchor points, which are covered in the course, one of the things that anchor points do for us, start helping us build market structure, which is this right here. So as we build this structure, that would be an anchor point, anchor point, anchor point, anchor point. What I'm trying to do by these anchor points, are we still doing the Trader Boot Camp, man? I got a boot camp course for sale right now. You ain't done that one. Down and then over. So that's what the anchor points are doing now. Man, I got 2 courses. You're waiting on a course. You could have already been through those. Imagine if you'd been through those and then we do the live boot camp. Then instead of sitting there, you'd be like, right in line with me. Shit, you might be helping me do the course. You'd be like, gee, did you see this one? Look at this, lined up perfect. That'd be cool. How cool would it be if everybody that did the boot camp knew what the fuck they were doing before we got there? That'd be nice. So, or is that too much to ask? Did I just curse in church, man? I apologize, man. That guy got me upset when he didn't have my course. I'm going to be honest. I thought we were friends, man. A fractal is a never-ending pattern. Fractals are infinitely complex patterns that are self-similar across different scales. They are created by repeating a simple process over and over in an ongoing feedback loop. Driven by recursion, fractals are images of dynamic systems, the pictures of chaos. This is a fractal pattern. That's what this is. These are just numbers. Thanks, Gage. I know. But Gerald, I gotta buy a course to be your friend. Yes. Yes, you do. We have an anchor point here on Google. And so this is a breakout that started that immediately went sideways and has now come back down. So same pattern you saw up here, right? Sideways, up, sideways, big down, right? Now we see the same thing. So there's our anchor point. Let's see, we got 1, 2, 3, 4, boom, buy, sideways. Now we're back down. So I know, man, boot camp course is awesome, but I mean, God, if they had to actually go through it and watch it and do it. But Gerald, it hurts. Let's get back to AT&T. But it hurts, Gerald. Let's save these. Let's save the 20-day moving average on here. We're going to save it. Now, as I said in the beginning, we're trying to find every day, I'm trying to find where am I at on this pattern? Where are we in this thing? Because based on where we're at will determine what I'm thinking about doing. So if I have a stock, let's say, what if I have a stock that's, what I'm trying to do, if I'm trying to add, let's say I'm trying to be an investor and I own a bunch of different stocks and I'm just riding the waves of the market. And as an investor, I'm riding the ups and downs. But I do want to know, where am I at? So just because it's breaking down, that would be like an alert to me. Like, hey, Gerald, 3M just shit the bed. It's headed down. Oh, let's keep an eye on that. I know this could take a week, 2 weeks, 3 weeks. Could take 2 months. Could have a 2-month sell-off before we get an anchor point. So let's take Google, for instance. We got the phenomena of the 5-day crossing the 20-day, right? This is actually a money flow cross. I don't talk about it as much, but that's what that phenomena is. It means it's confirmed. The 5-day exponential cross below 20, price is below it. The numerical alignment of the averages, Taylor asks, is 5-day exponential. You just click it and set it to dashed, I mean. These are minor moving averages, but what I'm more concerned with is numerical alignment. 5-day, 10-day, 20-day, they're all pointing down, price is down. So if I come back and I look at the money flow, I say, oh shit, we got stage 4 breakdown. We ran up, we put in a 3, now we're breaking down. If I want to accumulate, if I can go and say, what is Google worth? And let's say you're over here and you're like, well, it's worth 3,200. And you're like, oh, well, dude, stocks don't trade at value every day. They rarely fucking trade at value. They tend to trade too high or they tend to trade too low. And based on the cycle, this is where economics and all that, shit starts coming in. Where are we at in the business cycle? Federal Reserve's in there messing with it, right? All the shit that goes on in the economy, the natural stuff, shit the government's doing, wars, and all this shit is getting digested every day. And that's what you're seeing printed. And even if Google's worth 3,200, that's worth it right now. But if people think for some reason sales are going to go down, well, guess what's going to happen? Sometimes this confuses people. Like, Gerald, I thought the true value was $60. Yeah, it was. Now it's this. And you go, what do you mean? Well, the market changed, man. If you have a restaurant, I mean, duh. If you have don't let this confuse you, man. This is normal life. If you have less money come in, you have less money to spend. Your shit changed. Same in business. So some reason in the stock market, this will confuse people sometimes. Well, yeah, Ford was selling this number of cars, but due to interest rate increases, they're now selling this amount of cars. Why? Because it costs more to finance them, and gas is expensive. So nobody's running out to buy a new car. So guess what? That could keep getting readjusted. And so the asset value of something you own changes. And it's not just, it could be market manipulation, but market manipulation in and of itself isn't bad. It's always been. You know, people were, there's always been people front running trades. There's always been government intervention. There's always been companies that are favored by the government. I mean, how do you think we built railroads? The government subsidized it, right? And so that shit's been going on. Everything we see, corrupt politicians, wars, nothing's new, man. This is the same game last 5,000 years. I was talking about that on the subscription feed. They used to go get oil from whales, man. And then they dug a hole one day. And man's quest for energy, and it just keeps going. As long as it's profitable, that's what they're going to do. And we don't, I don't need to wonder and one. I want to own a little bit of everything. And so as it moves through these patterns, I start building and adding, taking from. So if I have a whole bunch of something and it runs up, hits a stage 3, what could I do? I could sell it. And you said, well, what's hit a stage 3? Couple things, man. Where's Exxon been? Look at Exxon. What do you think it's going to do? I mean, this has been a runaway, man. It's a whole nother class. But this has been a runaway. And you say, what's a runaway? They get easier to spot as you do this more. Trust me on this. Some of this takes a little time. These here, you notice these pullbacks on Exxon? Look how tiny they are, man. That's the pullback zone, right? The little pullback channel. We could take it up here. See them? Little channels, runs up, pulls back, runs up, pulls back, runs up. These channels. This is a runaway, man. Meaning it's not money flowing in the traditional sense. It's not going sideways, up, sideways, pull back, sideways, runs up, sideways, pulls back. It's not doing that. It's basically fucking just going up. And any slight, but it wants to money flow though, man. Look, when it hits this extreme RSI, it wants to pull back, man. Look, as soon as it hits it, you start to see some red days. But it goes again, right? But it wants to pull back. And what it'll do in normal price movement when something's not a runaway or to the downside, you see this phenomena to the upside and you see it to the downside where it stops money flowing and it's just overwhelming. We saw it with ARC to the downside, and it would like start to turn, wants to break out. Why? Because price's natural movement is this, man. This is how it wants to flow. And if you sit and think about it with life and things, it kind of makes sense. Shit's been stagnant, breaks out, runs. Well, some people have made money. Some people want to get out because they bought it maybe even higher. And fuck, man, I'm going to use this rally as a chance to get out. And that's what you see if you just sit back and think on this, when you have a runaway to the downside. Every time there's a rally, there's somebody's like, fuck, I'm up a little bit. Give me my money, man. And then it starts again. Well, the same to the upside, man. There's going to be people who are like, hey, every rally every breakdown is turn right around, let's buy it. They just keep buying it. And it just goes higher and higher and higher. And it can go, and then it'll start to go sideways, start to pull back, and then it just takes off again. And that's what you've seen and every takeoff is the same. What? Price gets above this green line. You're like, what do you mean? Well, let's put it over here, man. All we got's the green line. If all we got is the price movement and all we got is the green line, right? We come over here. We're just going to do the up ones, not the down ones. Doesn't that look like what we were talking about on AT&T? The guy says, how do you define porn? He goes, I don't know, but I can know it when I see it. Right? You ever heard that court case? He's like, I don't know how to define it, but I know it when I see it. This is a breakout. Define it how you want to define it. It opened down here. It rocketed up above the 20 and it closed. That's the definition. Now you might say, well, how far is the bar got to be? I don't know. It just needs to be a force, a breakout movement. Just like the word, it's a fucking adjective. Just like it says, it's breaking out. And it's above this green line. You could say that was one. Right? It was. It was. And so as we go look, every movement of a takeoff does the same thing. You got a little few in there. You got it here. You got it here. And you're like, what do you mean? They break above that green line, man. And every down move breaks below that green line. So just knowing that, we gotta look, and if we see price, and if it's above it, it's going up, right? You're like, well, it could come down. I know, could go up again. I don't know, but if it's above it, it's going up, and if it's below it, it's going down, right? One piece of the puzzle, man. So that's one piece of the puzzle. Don't ask questions, man. Don't be fucking greedy. I'm trying to teach you how to do this for the rest of your life, and you're asking me a stupid question about a stock. Just listen. I wish you knew more about the 20-day moving average than you know. It's a very important indicator. What about other indicators? It's pretty important. If you come over here, I don't even use this much, but I want to show you something. Let's put Bollinger Bands on there. You ever use these? Just put them on there. The middle band is the 20-day. It's a fractal number, man. It's an entire month of trading, okay? Let's take these bands off. You don't need Bollinger Bands. They are cool, though, but you don't really need them. RSI does the same thing. So, yeah, it's my highest conviction trade. So what I'm trying to teach you right now is how to determine what stage any stock is in. So once you know it on any stock, you don't have to say, what do you think about this one? You know what I think about it. So if I have an investment, where do I want to buy it? I want to buy it undervalued. And you say, how do you do it? A lot of places you can get the value of a stock. Listen, stock values go up and down. I don't know why this confuses people in the stock market, and they're like, Gerald, they reset the price value. I know. They reset it on houses. They reset it on land. They do it with all kinds of shit. Prices change based on circumstances. If nobody buys it, it comes down until there's a buyer. It's called the free market. Same in businesses, man. If people stop going, if sales drop, if there's if the things that are going to affect the business that weren't there yesterday, that are there today, prices get reevaluated. Prices of paintings and art and collectibles. It's always changing, man. Right? So what you have to know that, and then you can make decisions based on that. So you could have a stock that Exxon's not a good example because it's a runaway. Well, let's not get too carried away on value. You just have to accept values change. And you also have to have the thought like, okay, maybe right now Ford's not that valuable, but I do believe based on the business model, their ability to navigate the economy, right? Let's back up Ford to say a weekly. Now, it was down here, man. There was a time when everyone thought Ford was worth $4. Look at this. This is one of the best buys of your life, and you didn't care. You were looking at other things. Right? Me too. Well, I bought a little bit. I ain't gonna lie. It's up pretty big too. But look at this. Right? Now, normally this is when people are worried. But what was the best time to buy it? Now, if we respect this stuff here, what is this? It doesn't mean the highest high. It doesn't mean that. It means the current cycle. And you're like, what do you mean cycle? The current stage. This movement right here. See, the money flow is trying to capture movement in a stage. It doesn't mean the highest high. It doesn't mean the lowest low. It doesn't mean it's not going higher and not going lower. It's as it moves each day, taking in new data points, new information, new shit happening in the world, new cost implications, labor shortages, all that shit's being taken in every day and priced in real time every day. People trying to guess that. And so the value line itself will move, but not as often, but price itself will move up and down. Mr. Market, as Buffett's famous for calling it. So, but all this is doing is measuring stage movements, man. Doesn't mean it's done going up. It means for that stage, it's probably done going up. Meaning it's gone. When you see it, you're gonna want. Your price is gonna want to do this. It's gonna want to pull back, man. It's the natural flow of price. What we don't know is how far. So when something runs, it could keep running and running and running. And once it goes extreme, you just know, hey, I'm on extreme territory. And you're like, well, how do you play it? Well, if you've had a big profit, what do? You could take some off the table, right? That would be the time you would do that, not on lows, right? You want to be the guy looking to get the lows, right? And then he's not looking to sell until he starts getting extremes higher up, man. And if those extremes correlate with value, you can anticipate the asset you own and probably stalling out or going lower just because it hit true value, unless there's some catalyst where the analysts come in and raise that price. But that's a whole nother thing. So as we look, what's one right now? Where's Dow? Oh, it's an ugly chart though. Oof. Oof. So where's our highest high? Over here. One here. What am I doing? I'm just drawing out the money flow, okay? So this helps me see it going into the future. And even if these aren't lined up perfect, it's just helping me see the flow, right? Didn't stay sideways long. Went up, went sideways, right? Went sideways. Now what? Big move down. Big move. Now, if we didn't have this 20 on here, this was your breakdown there, but it was still inside of this stage, so that makes it a little tricky. You're like, what do you mean? Well, when you get up into a stage 3, when price stops and just starts to go sideways, it's going to, you see this line, that's price jumping up and down, up and down, up and down over the 20. And as it moves sideways, you're going to see it kind of as it's building out. And some of those states can get really wide, man. And that's where you have a lot of fuckery. Now, if you're a short-term trader, those guys, when they get into that, they could drop that down. If they go, let's say we're looking at a 15-minute, now what? You're seeing much bigger, swoops. So this is inside of that breakdown we saw. What do you see? Down, down, down. Just grinds down, And I guarantee you, we won't do that, but put it on a 1 hour. Let's back it up even more. Same thing, right? So it's fractal. Fractal's never-ending pattern. Fractals are infinitely complex patterns that are self-similar across different scales. So we can see this movement of price, man. You can see it, man, on all levels. Big ugly day, bye. Big ugly day. Stop asking what tickers and listen. What the fuck is wrong with you guys? It don't matter what ticker it is. I'm trying to give you the keys to the kingdom. I'm trying to make you a fucking master trader. You can just look at it. You don't even need indicators. If you weren't let's see. Now you made me mad in church, man. Made me mad in church. This guy. Oh, we can't ask about tickers, but we can sell books. I can't even pass the collection plate in church now. What is wrong with the world, man? He obviously has never been to church. Let's pull up the cues. Yeah, man, everything's breaking down. So, as you go through this, everything is breaking down. We are moving down, man. We are moving down. Remember, as we're moving through this, man, remember, this is Fractal. And your time frame and what your goals are relative, right? So if you're approaching the market as an investor, the way you would use the money flow would change. Okay? You're going to be diversified. You're going to want to be looking across different market sectors. And you're going to obviously follow the indexes, like the S&P 500 is our wind, right? All right, turn off comments on Instagram. People are too stupid to listen to. Your time frame is going to affect it. Your time frame of, the goal of what you're trying to accomplish. So if you're a trader, you got you need a signal. What's your signal? That's what you're looking for. What's your trigger? In the book, I call it the trigger. And for me, as a short-term trader, it's 5-day exponential average. It's where it starts. Where's price in relation to that 5-day exponential average? So if I'm watching what I had settled into, and there's a lot of ways to trade. Let's take this off weekly. Let's get down to the daily. And if the market was in an uptrend, if I'm a trader, I'm looking to trade breakouts. This is something where people get, if the market's in a downtrend, I'm looking to short breakouts. The opposite. If I'm a trader. Now you could try to play both sides, but I definitely think you should be focused on, if you're trading, if you're doing short-term trading, you need to, your best bets are going to come in direction of the trend. And so I'd be looking to short down trends, down moves, and buy breakouts would be up moves. A breakout and a breakdown is the same thing, man. These are the same thing. Stage 3 is a stage 1. It's price consolidating. They call it distribution up here because people are unloading shares. Well, it was only distribution if it broke down. So it means there were more people unloading shares, and then you see it break down, right? So if you look at Dow right now, let's look at it without the right now. What do you see? Big breakdown, right? By any measure, wherever you were to put the box, wherever you put them, right? Big breakdown. You didn't even need the 20 to tell you that. I mean, it was already turning down. But if we were to put the anchor on here, let's save this. Yeah, keep it going. Let's save this. Let's pull up an exponential. Let's do 5-day. Let's do red. Let's do a dashed update. And we see it, right? Now, the problem with that one right there is you can see them right in here, right? Why? Because it's trading inside of this range here. It's range bound, it's caught. We can clearly start to identify the bounce points, right? It just starts bouncing off of them. So once this broke, right there, man, at the open, this is down we go, right? So as I'm looking at this, and I'm expecting it to do this, right? To go up, go sideways, go down, come down. What we have is right here. That has started, right? What I don't know, now this one came out with ferocity. Like that was a hell of a down move. Pretty fast, pretty quick. So what I'm going to be looking for, let's say I want to be a buyer of this. Well, I don't want to buy it if it's going to keep going down. I want to try to get the best buy I possibly can. Where do I know? Well, I know where prices stop before it tends to stop. So if I have these anchor points drawn, you know, this is what I'm looking at. If I'm looking at it from the downside, right? Looking right around in here. These are where I expect that it's going to go. But as I'm looking at this, what do I want to do? I want to find the stage, man. I want to find this action down here, though. So as I'm watching it being drawn out. Bam, it breaks. And you think, well, how long could it go down? At a long time? Could. You're like, what do you mean? I don't know. We could look at something like, wait, where was, look at Netflix. Had its big day, right? Big breakdown. Where's it in relation to the 5-day? 5 days pointing straight down. It's below the 5-day. It can't even get above that. No need to buy this stock. The momentum is to the downside. Everything is pointing down, right? What we need is everything to stop pointing down and start to point to the right. And when you can make, obviously it did it right here. So this is a much better place, obviously, to buy than here, right? And it's obvious looking at it in the after effect. But what we got to do is start looking for this pattern in real time, right? And that's what we're doing as we're trading. As an investor, what I'm more concerned with is I don't know where it's going to go. What I do know and what I believe is that over time it's going to go higher. Same with houses, same with art, same with fucking everything in your life. It goes up, not down, due to inflation. But because they're assets that can be owned, there's a free marketplace and value perception can change. What do we perceive Uber's worth? Well, with $5 gas and nobody to drive, it changes things, right? Overhead, the cost, the variables to do business changed. And if that happens, what? Price is going to come down, man. But what happens if that answer starts to get solved for and money, profits increase? What? Well, they raise that, man. And you're going to see that natural flow of stocks. So, well, if you can watch that as an intelligent human being, and you could say, okay, cool. Am I trading here? If I'm trading here, different setup. I'm looking for different things, different fractal system. Maybe I'm going down to a 1 hour. I've got targets set. I got stop areas. Like I know what I'm doing. I'm going in with an expectation of making more than I lose, but I got to protect myself, right? That's trading. If I'm investing, I don't want to sell, but I want to buy good ones. So I own houses now. I'm not selling them, and yet I'm buying houses. So, but I don't want to overpay. So as I watch this cycle, the beautiful thing about the stock market that my real estate friends miss sometimes is this idea that this what do you say? This pattern of finding these stage ones and trying to identify a stage. This I can do. And the guy said to me, well, you can't buy the bottom. Oh, yeah, I can. He's like, what do you mean? I said, buy all of them. What do you mean? Man, they all look the same, man. When the bottom hits, I will have bought it. And there'll be a guy say, well, that's not the bottom. This is going to happen. Okay, I don't know that. But I do know what stage ones look like. And so if I'm an accumulator, right, of Exxon, I've made a lot of money in stock in Exxon, Chevron, and Conoco. Probably some of my best returns ever. And it's like, why? I buy stage ones, man, in assets that produce cash flow. Like, this is not, okay, and you're like, yeah, but you were wrong for 2 years. Good. But you're like, what do you mean? Because now that return is exponential, right? So if we come over here and back this up, man, and we can do this with 100 of them, BX. I've been buying stage ones of BX for a decade, or 7 years, not a decade. And they're going to go up, they're going to go down, they're going to run up, and there's going to be times where when they run up, yeah, you might take some down. You might. Let's say you bought some. Now I'm on a weekly here, so we're buying stage ones right in here, right? We're buying stage ones in here. Well, when it goes up to here, that's a big ass move. Remember, it's a weekly chart. You might take some down and drop down. So you loaded up some, and now you're dropping some down. You could. I do that all the time. Pulls back down. Hey, it's on sale again. Might want to buy some more. And then when it runs up, what? Take some down, man. And you're going to see that play out, man. And then it runs up. Then it comes back down. And you're like, well, it's been a while. And guess what? During this time, they've reevaluated, repriced the company, man. And they may raise the target and say, oh, it's worth one whatever. And then, okay, well, guess what? To get to there, it's going to break out above the green line. And so the more we spend a little time, with common sense, the more we spend a little time with the concept of time times amount times yield, the more we spend time with fundamental analysis of that, companies, understand balance sheets, how they make money. You don't have to be an expert at that. There's services like Zacks, The Street, Morningstar, TipRank. There's tons of these that'll, you just put the ticker in and it just gives you a number, right? Back in the day, you actually had to fucking read it. And now people just watch YouTube, come up with crazy opinions. They don't understand values of companies or cash flows or history, right? And that's where you need to be, man. Where you spend some time with that stuff, man. Make it. That's how people accumulate wealth. It's on purpose. I had a guy and I'll end with this. I had a guy the other day. I put this on my story and I said, the guy said he was putting $500 a month in his Roth, even though the market was going down. Like they were clapping. Like $500, huh? Okay. Wow. Now, have there been months that I didn't put $500 in? Oh, yeah. That's still not a lot of money, man. Just because it's all you can do, don't make it a lot of money. You get what I'm saying? Meaning, to a homeless guy, that's not a lot of money. Like, well, that's a lot of money to a homeless. No, it's not. Stop thinking like that, man. What you're doing is you're giving your side that doesn't believe in prosperity and abundance fuel. Like you're allowing that to fester in your mind, man. It's like, oh, well, it's okay. It's okay if I'm like, people like me, we don't, like, that's what that does, man. And it's like, no, even if you don't have $100, don't see $100 as a lot of money. I didn't say don't respect it and don't apply it to things. I definitely would do that. But don't, and you're like, what do you mean? Like, well, dude, when I'm trying to buy a real estate deal, I teach real estate, right? Buying a property. It's $35,000 down. If we do this strategy, this dude's doing at $500 a month, that's $6,000 a year. We're looking at like 6-7 years, dude. 6 years before you even buy one. That's not good. That's not a lot of money. It's not like you're really, this is not pushing for a dream here, man. So for common people, regular people, yeah, it's good, I guess. But what I'm trying to get people across is that common people can go way bigger. And that in a short period of time, when you learn these concepts, things like this, not just this, I don't have all my money in stocks, but as I've studied dividend stocks and come to understand REITs and understand oil companies and understand index funds and understand dividends and believe in them and have faith in them, like Hanes Brands and McDonald's and Verizon and the companies that I own, and believe in them. And I plan to keep them with courage and faith to go through each day, holding these and building out these assets. And if they sell off, I'm looking to buy. And if they run up really high and they become ridiculously valued, I'm probably looking to trim some so that I can apply that money to others. And as I go forward every day with one purpose, get richer, accumulate, right? That's what I'm thinking, accumulate. And if I do that on such a small scale, it's going to take me longer. So one of the things I've been trying to teach people is if you look at a compound curve, it slowly goes slow, and then at the very end starts to rocket up. Let's just skip down there. Why don't we just start there? I'm like, why? Like, man, like go hard for a period of time. 6-7 years, man. You go hard. And, and that's the point I was trying to make on there. People are like, but that's all he could do. And it's like, bro, stop. Stop making excuses for that. Don't be that. Don't fall into that camp. Fall into the camp. It's like, fuck, dude. Why can't we do 5,000? Like, fall into that camp, man. Right? Don't give yourself, oh, well, it's fucking raining today, so don't want to go. Don't do that camp, man. There's always people for that camp. Don't be the cheerleader in the camp for less. You know what I mean? So don't be, oh, that's a lot of, no, it's not. It's not. That doesn't mean we have it. So I can be broke and $100 is not a lot of money. And when you understand what I'm saying there, you will begin to see money and dividends and these things like dividends. Think of this. So I showed you the Ford one. Here's the thing. There's some of these deals right now in your life, right now, that in 3 years I'm going to be on here and we're going to look back at the chart and I'm going to be like, look at that deal. Could have changed your life. Like, I'm going to show you, going forward, I'm going to show you these. So what we have to do is somehow find them in our life. So what I tend to limit my life is to about 150 stocks or less. I'm looking at new ones, but my life isn't obsessed with new stocks. My life is obsessed with what I own. Where is it? Right? Because maybe the best deal for me right now is just to keep pounding Pepsi, man. I don't need to make it any fancier. I don't need some company reinventing this and that and doing this when the Pepsi's right here on sale, man. And I'm using that as an example. But maybe, remember when we were looking at this one where Ford was back here at $4, man. Maybe the play then was to have fucking put 20,000 in there, so that when it went to $25, you would be able to what? Pull that out and buy a fourplex. One fucking transaction. So if you start entertaining that one transaction, like once you get this in your mind, and you get past the 500's a lot, and you come over here, and you're able to see this. And you can buy 1,000 shares and just keep them and add to them. And it's not everything. It's not you upsizing and you did it smart. It's inside a portfolio. It's not. And if one thing's down, you're like, all right, but this over here is up. And I'm playing this like you got to look at when you came into the game, man. You just got on the roller coaster. And so you're going to look back. And some guy bought over here and then this happened, There was a new investor in Ford over here. Because it was pre-COVID and all that and everything was great. There was a guy that just bought some. And then he just went to shit, man. It went to $4 and he had a way to react. Could have been a chance to change his life, or he could have just sat there fucking paralyzed and done nothing. This was a chance. And I could show you stock after stock after stock after stock after stock after fucking stock of this stuff, man. But look here. This is months of being down and going sideways, Then it runs up. And there was a guy that bought over here, and then it went down. And so as our minds are prepared and open and seeing the movement of price, sideways down, sideways up. And as I'm watching and I begin to understand values, that allows me to buy every stage one of Exxon with pretty much confidence, while followers make fun of me in the comments and say stupid shit. Those people aren't around, by the way. They don't make it every fucking Sunday. I do. They don't. But they had all kind of comments and funny shit to say. Right? Where's that guy now? I would get heckled on the Exxon one about the green energy and all this bullshit. Same thing with McDonald's when everybody was going healthy. We're buying McDonald's down. Same thing when they were suing the cigarette companies. I'm accumulating those. And you never have to let them go, man. You're going to be an old person. And you can look back and go, wow, look at these 19,000 shares of whatever I accumulated over my life. Or have none. None is an option too. These are all decisions, man. And it's the money, like he said on YouTube, money flow mindset. So keep that in mind. Because I've had a lot of new people come to me and they're like, oh, this is down. And I'm like, well, this is when you get to reflect, man. Why did you buy that stock? Were you investing in it? Like, fucking think this through. Because you have the rest of your life to either fuck this up or get it right. You're going to be alive. So if you're 25 and messed it up, You got to look at what did you mess up? Why? And what do you mean did it? Just because the price went down, that ain't a mess up. If you owned Ford and it went to $4, was that a mess up? No, man. That was an opportunity. Same in Hanes brands right now. Somebody asked about that earlier. Yeah, man. This is an if you don't think that, you get out. If you're worried about a stock, get out. Because you don't get to affect the price, man. If price is the reason you're in it, you just get out. Because you don't get to affect that, man. But this is an income stream for me. I own over 1,000 shares. So when they pay me money, it's money, real money. So if I go look and the company's good and they're selling underwear and things are all right, but yeah, the commodity prices are up and we got fuel pressures right now. Well, that's called fucking life and business. Okay, that doesn't mean these guys go out of business. They adapt. They cut their workforce back. They might cut their dividend. Okay, Ford cut it and it went to $4, and then it went to $25. And Chevron. Let me show you another one that I own that cut their dividend that everybody had a fucking problem with. Let's see. All we did is keep accumulating stage ones. Let's see. Take it back. ConocoPhillips went to $20, dude, during the last oil crash. Look over here. It went from $75 to $28. So if we study history, does it often do this? Yeah. Yeah, it does. And what did that do for us? That was an opportunity. So I'm buying every stage one, man. I've owned this stock for 9 years, 10 years, whatever it is. I'm buying all of them, man. Whatever, right? And when they run up too high, what do we do? Trim some of our oil holdings. It's not complicated. So what have we done? I've trimmed them. Now I'm just riding it out. Waiting on the next pullback. In the meantime, I'm going to collect dividends. So if I've done my job with courage, bought and added down here, what if instead of doing $500 a month, I did $5,000 in Exxon? And I'm holding it. And then the next time, $10,000, right? Instead of 500, man. So, that guy's life materially changes within a short period of time. And I get it. Maybe 500 is all he can do. Okay. But I'm still not going to act like that's doing a lot, because it's not, man. It's just what he can do. But people want to champion that, man. And it's like, no, he needs to see that, man, because the moment you champion that, people get soft on that. And they're like, oh, well, I'm doing good. No, you're not. Let me tell you how math works. You're not. You're doing good if the goal is to have a couple million or $1 million when you're 79. Yeah, you're on track. But if you want to have a couple million when you're 40, that's not going to do it, guys. He's being lied to. $500 a month, you're not going to have $1 million at 40. It's not going to happen. Well, maybe if you started at fucking 12, but you get my point. So use this, and maybe you don't use it like I use it. If you trade with me and we're in Discord, maybe you don't use it like I use it. You may not have the belief in Uber that I have, and I can't give people conviction, and you shouldn't ride on my conviction. You should ride on your own conviction. I just share people what I do, okay? So if I buy a beach house, I put it on Instagram. If I buy this stock, I put it on Instagram. And it's all within this mindset. And it's not something I can casually do. Like every day, I'm working on it. Part of the reason I go live and talk and I'm talking to me too, man. I got to have courage. I've got fucking millions in this. Some people got a few bucks. I get it. Oh, I got my whole 70,000. Well, I've got a whole fucking million. And when it comes down 10%, that's 100 grand. So yeah, I feel the pain just like everyone else does, man. And guess what happens when it doesn't get easier when you have 10 million and you watch your 10 drop to 6. That's not easy, because you know how hard it was to get that money. And that never changes for you. What's going to have to change for you is your ability to just have courage and faith in your process. And your process may be different than mine, but you got to clearly define yours. Clearly define it. Play out all those worst case situations in your head. What if Russia launched an actual fucking nuclear weapon and we hit it with an interceptor? You know what's going to happen to the goddamn stock market if that shit happens? You're going to see a fall like you've never ever possibly imagined. and everyone on options and all this shit, you're going to get blown the fuck out, man. You know, like if you're leveraged, it's over. It's over. They're going to blow you out, man. Now, if you're not leveraged and you have some cash and you're diversified, what? You better hit the buy button, because if we survive it, you're going to make a lot of money. And if we don't, it don't matter anyway, right? And you say, well, that's an extreme. Yeah, I know that's extreme. But, dude, I was sitting at a computer trading when the planes hit 9/11. It closed the fucking stock market. If you were on leverage, if you were on, open synthetic longs of some kind or triple, like, you were blown out, dude. Instantaneous. What do you think about Stan Weinstein? Stan Weinstein's the grandfather of the 4 stages of price movement, man. I didn't invent this. I got it from Stan. What difference that I did is I took what Stan gave me, and I'm sitting at a blackjack table and I'm playing. Put this back on T. Each week I try to teach the money flow slightly different from a different perspective. It's a lot. If you don't have my course, Getting Started with Stock Charts, Taylor, go get it. Taylor went quiet. He got mad at me. Don't get mad, bro. That's why I don't have any friends, because I pick on them. In the Army, we were allowed to do that. You could fucking razz people, and they just took it. And then they got you back later. What I've noticed since I got out of the Army, people have a hard time with that. Clearly define your goals, man. Figure out what you're doing. You don't have to go big. Although I just advocated going big, I don't advocate that in a lose sum game, meaning you win or lose. Meaning I would never play big when it comes to roulette. Let me say that again. I don't play big bets when it comes to roulette. Why? Because you lose or win, and that's it. They take your money. I don't like that. Even in trading, it's not like that. You're like, what do you mean? Well, if I'm trading with rules, if I have rules for myself, well, what would I be doing? That's a breakout, and this is a breakdown. So if we were doing the Qs, we should have got short the Qs, right? If we're shorting it on the one side of the green line and long. Anyway, I'm going to have probably, my stop. I'm probably going to, for me, I always find market structure and put it under there. And you're like, wow, that's a lot of room there, dude. I know. So based on, this is how I base my position size on. People have different ways of doing things. The way that I evaluate a rental property, the way I evaluate a piece of investment deals may be different than the way you do. So when I'm looking at stops, I'm looking at a logical place, meaning price has been here before, man. It would be nothing for price to come down here again. So for me, my stop needs to be on the other side of where price has been, because once it goes there, and it tells me it's changing. Anything in here is just noise, right? It's just noise. And you're like, what do you mean? Well, there was our pivot point. So again, I would have been using this. So if I'd have gotten long in here, I'm still in the trade, and now we're breaking out. Now we're running. I didn't get stopped out right here. Why? We hadn't even broke the lowest low of this stage. So if I'm seeing this, if you understand stages, the bigger picture, as long as this stage holds up, when it starts to run and comes back, as long as that stage holds, maybe it's going to take a second to get it going, So if we're trading, we just got to create parameters for ourselves. You can't blow out, man. So and let's say you got 100,000 in your trading account. Well, dude, this might be a $5,000 trade. Where's your target? Previous high. And if I have my stop here and I've entered here and it's just 5,000 of 100, I mean, if that's a losing trade, that ain't that big a deal, right? But what if it goes up? Well, then I made a little coin. And while this is going up, what am I doing? I'm managing the trade, so I'm starting to downsize because we hit our target. Well, I'm not getting out until what? We get a sell signal. This is me talking now, meaning this. But as we go up and as we hit possible stage 3s, I wanted to start downsizing the trade. Why? I'm lowering my risk. I'm locking in the gain. And so that's how I began to money flow swing trade. And as long as, like, again, what I said there, as long as this level holds, and then as I'm going up, I'm taking it down. And I'm not like, oh, I should have held it. No, that was the rules to begin with. And we know a 3 can just keep going, so we want to have something in play where we can ride that, you know. But now look, we're getting stopped out. So a lot of this is as you define your time frame. So if I'm an investor, you would ignore all the shit I just said there. An investor doesn't give a shit about that. The investing isn't that. The only reason I might consider selling some as an investor is maybe in my buy and hold, I loaded up on AT&T here, and by the time we get to here, the position's just large. Yeah, it's larger than maybe I'd like. And just for portfolio management, I take some down. Did I make a little gain? Yeah. And then I roll that to what? Something that's down here probably on the scale, right? And so what am I doing? I'm rolling money forward inside of my investment portfolio, which is kind of like trading, but that's not technically, you don't want to be doing that every position because you need to build some of these, right? You're going to build them over time. You're going to build them over time, man. Hope you guys are doing all right, man. Fixing to head back to Texas. Yeah, Stan Weinstein was the big proponent of the 4 stages of price movement, man. We'll turn on commenting. Appreciate you guys catching Sunday service, man. I archived these on YouTube, by the way. So all right, YouTube. You guys be good, man.